Hello traders, hope everybody's doing well. So today's quick video is going to be a quick market update on gold. So what we're going to try and cover is pretty much a standard intraday market movement, and we're going to take a look at what the market is doing right now to help get a better grasp and understanding of what a market structure is currently doing and what sort of market structure are we currently in. So let's quickly take a look at the levels that we have on the 4-hour chart that are very important and where the market is most likely going to be reacting. So on the 4-hour time frame, we quickly see that this range here on the 4-hour on the Friday from last week, 3rd of July, gold posted a high at 41.96, and this week we had a low that gold posted on Wednesday on the 8th of July, and that was right around 4,024. And that's the main support and the resistance for the sort of market structure. But overall, as we squeeze the chart, you will see that we are in a bearish trend. We still haven't broken out yet. We are sort of attempting. Gold is trying to, resist and try to break out off this bearish trend, but we still have like a lot to go on. I mean, if we're supposed to draw a trend line just to see, we do have on a 4-hour 3 touch points valid for a trend line support, but as you guys know, I don't really prefer to trade based off of trend lines support. What I basically prefer are levels where market swings off of. So that was the quick outlook on the 4-hour time frame. On a 1-hour time frame, so very near term, short term market movement, what are we expecting the market to do on the Friday pre-London Open? So right now, as we look at the overall structure, I would say we're sort of choppy right now, especially in this area right around here, because the market, as you can see, there's a lot of candles around here. That market is just posting with a lot of wicks, so there's not really much to go on. It's just, market just hits a high, hits a low, hits a high, hits a low, but it's just choppy sort of price action. There's really nothing much to go on. Overall, on the hour one, the market is still trying to, basically, it's in a position where it's posted a high. Most likely it's looking to correct lower within this little short-term uptrend, this little move here. But as you can see, I mean, the trend line support wise, this does have like 3 touch points, but it does not have a clear sort of what you would call conviction on the 3rd touch point to post a new high. You can see the market sellers clearly came in right around this resistance area at 41.34, and the market just briefly had a little bit of a push, failed to get back to the resistance that it had posted earlier, and now we're back into an area where it's starting to look like the sellers are maintaining control. There's still that tug of war going on between the buyers and the sellers, but overall the market, like I said, is pretty choppy, especially around this range, the 41.38 and the 41.09. This is 41.08 actually. So this is like the range where you would want to just stay away from the market. Now let's go down to the 30-minute. I really like this 30-minute chart time frame because most of the trading setups on an intraday level you will find on the hourly and the minute 30, and for the execution you go down to either the minute 15 or the minute 5 should there be a setup and formation. Now what I like to do is I like to draw these legs to understand the market behavior. And let's see if we have anything substantial like a higher low, higher high, or lower high, lower low sort of structure, so we can anticipate what the market's next move is going to be. Overall, I mean, this current leg down, this is like what the market's currently doing, so there's really no point in posting this because we don't really know if it's going to bounce right off from here or it's going to continue lower. So the current leg, we always leave it alone. We don't really want to look at what the market is going to do. What we're going to do is just take the previous posted levels in the market and just try to see if the structure makes sense. And as you can see, the market structure does not make any sense. You see this? The high, the low, the lower high, sort of a lower low, which also got broken. So that means that on a smaller time frame, the market is very choppy. There's no trend here to work with. So you don't really have like what I mean by that is there's no low that you can basically buy from and have like a good trading setup with a good risk to reward ratio, and there's no high you can sell from either because it just doesn't have that structure and the market's not prepared just yet. So when a structure looks like this, markets are basically confused, or there's like lack of volume, there's not really conviction behind any move. The market tries to break out in a certain direction, you will notice there will be fake outs, much like it did here. It tried to break lower, bounce back higher. It tried to break the high, but it closed back lower. So you see, it's a very confusing sort of a market sentiment that we see right now from the price action. So it basically gives us an idea that, yeah, we just want to stay away from this. We don't really have any reason to, look for a position here in this sort of a trading environment. Another thing that you could do is always look at moving average to understand what sort of, market conditions we're looking at. Usually, if the market is above the moving average, what that means is markets are bullish. But as the distance from the market's pricing gets closer to the moving average, the dynamic support for the moving average, it is expected to bounce from it. But the moment that it starts to whiplash between the highs and the lows and just choppy price movement on both sides of the moving average, this means that the market is sideways. You do not want to be a part of this market. So you don't want to participate in either a buy or a sell. This will be the short-term market outlook for gold. So be careful out there, traders. Don't look to trade this market. It's a Friday. Just protect your trading capital. Wait for a better opportunity to come up and basically look to trade that opportunity. And most likely that is going to be once a market has stabilized, it is broken out into a fresh trend, and it is posting, like newer highs with higher lows, higher high formations, or lower high, lower low formations to give you an idea that, okay, you can basically start to enter the market for a buy or a sell. Alright, so with that being said, thank you so much for tuning in. Thanks for watching. I'll see you in the next video.